Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux, and I am the Mortgage Mom. And I bring you this show every single week, sometimes more often than once. Sometimes I do home buyer workshops like I did this past Sunday. But I bring you these shows once a week to keep you educated about everything that is happening in the real estate and mortgage market. Guideline updates, program changes, new programs that come about, loan limit increases, everything that you need to know to stay abreast of the current situation of real estate and mortgage, and to make sure that we're educating you and getting you put in the right direction. That is what Mortgage Mom Radio is all about. So today, as you guys can see on the title of my show, I'm going to be talking about buy downs, lock and shop. I also want to talk to you a little bit about Mortgage Mom Radio as well. So it is going to be a fantastic show, and I do want you guys to all participate. I did not send out a text message today. I actually made a mistake. It does happen. I'm human. I forgot to turn off the texting, so it went out automatically on Monday. And so, as I have promised so many times, I will not ever spam you guys. I will not text you more than once a week. So I felt really bad that that went out on Monday, even though I was not going on live. I don't know if many of you clicked on it looking for me and couldn't find me, but I did not want to send out another text message today. So hopefully if you're hearing this on radio, you guys like it. If you have subscribed to my channel, or you followed my Facebook page, or you watch me on Twitter, you should have gotten a notification that I was going live. So I do hope that we get a good amount of you that jump on and ask us your questions. Remember that this is an interactive show. The more questions that you ask me, the better that the show is, because that means that the questions that are being asked are those questions that people want to hear the answers to. If you're thinking the question, there is a good chance that there are many of you that have the exact same question. So we do want you to be brave. We want you to be part of the show. We want you to interact and be live. The only way to do that is to follow us on one of those social platforms to make sure that you know when we go live. So whether you like YouTube or Twitch or Facebook, whichever might be your favorite, you guys can follow along as long as you either like, subscribe, or follow the page on one of those platforms. If you want to get a text message from me when I do go live so that you can be interactive, you can be part of the show, the best way to do that is to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That is the best way to know that we have gone live, is to get that text message. And like I said, I didn't send it out today because I truly do not want to be a burden on you. I don't want to be a spammer. I promised I would only do it once a week, and I accidentally sent it out on Monday, forgetting to cancel it from the previous week before. So we're doing this show today. Hopefully we get a bunch of people that come on here after the fact. Hopefully as we're going through it, enough people have gotten their notification that I went live, and we do get some additional people on and asking questions. If you're here, let me know that you're here. Tell me hi, say hello. And again, this is interactive. And if you want to be interactive, you want to ask your questions, and you want to be part of the show, you've got to watch us do it live. So I do definitely want you guys to text the word MOM to 844-935-3634. 3634. Now, that is also the phone number here at the office, and we do answer that phone 24/7. So if we're not in, we don't have somebody that is awake and, functioning to be able to grab the phone, it does go to a call service, and that call service does have access to our appointment book where they can get you scheduled. So no matter what, if you're listening to the show in the evening and it's just easier to remember to call us, you might get somebody pick up. And if you don't, then the call service will answer and they can help you get booked for an appointment at a later date, the next morning, whatever works best for your schedule. We do take appointments on Saturdays and Sundays as well. So if that is easier for you, you work during the week, it's hard for you to talk, and you'd like to spend your weekend trying to get yourself put together and ready to purchase a home, or you're trying to figure out how to pull cash out, that would be the best way to do it. So here we go. Like I said, this show is going to be about 3 topics. We're going to talk about buy downs because that is what everybody is talking about right now in the real estate world. If you are selling your house, chances are that your real estate agent has talked to you about buying down the rate for your incoming buyer to try to help make your home more appealing to someone who is, in the market and looking to buy. If you are a buyer, you are very rate conscious right now of what's going on with the interest rates. We've had quite the wild ride this week, so we're going to talk a little bit about that. But you're looking at, how do I keep this housing still affordable? Interest rates have spiked. What do I do to make, this home a little bit more affordable until things settle down and interest rates do, take another dip down, and then you can refinance to get into, a longer term, better interest rate. So we're going to talk about buy downs today. We're going to talk about lock and shop. So if you are out there and you're looking for a home, and let's say you had locked in your rate a month ago on the lock and shop program, you would have been thrilled by the interest rate that you were getting if you were getting yourself under contract and opening up, your transaction today. You would be thrilled had you locked in that interest rate 30 days ago. So we're going to talk about that. These are things that we have done. These are topics that we have done shows about in the past. We did it about 6 months ago. When we did it, it was really quite funny. A lot of people thought that we were crazy. They had never heard of the buy downs before. They didn't want to do the lock and shop. And now 6 months later, we've got a lot of people going, oh, I wish that we would have listened to you. So that is what this show is going to be about. It's going to be a fantastic show. So I want you guys to all stay tuned. Don't go anywhere. We're going to take a super quick break. And when we get back, we're going to dive right in to buy downs. So stay tuned.
Hi, this is Carrie Young with Mortgage Mom Radio. Do you dream of moving to another state but don't know where to begin? Let us help. My team and I are licensed in multiple states. We can prepare you to buy before you make the big move. We also have numerous referral sources. Having recently made a big move myself, let us help you prepare to make your dreams a reality. Give us a call. That number is 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. I don't know if you've heard about it, but rents are skyrocketing. Do you rent right now? Are you a tenant? Well, chances are, if you haven't felt that pinch yet, it's coming. Think about when your contract is up and start thinking about what your landlord might do. You may even want to call your landlord to find out if they plan to increase your rents. It is happening all over the nation, and the last statistics show that we can see a 15% increase from 2021 to 2022. Give us a call. Let's stop the bleeding. Let's get you into a home. Let's lock in a monthly payment that will never change. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website to mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Okay, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and I am the Mortgage Mom. And today we're talking buy downs, lock and shops, and about Mortgage Mom Radio. Those are the three topics I'm going to try to hit today to make sure that we get you the information that you need. So right now there is a major buzz going on throughout the real estate community. If you are a seller and you have been thinking about selling your home and you're just getting ready to list the property, or you've been on the market for quite some time and you're not getting offers, your chances are that your listing agent, the agent representing you, has gone to you and said, we really think that you need to put something into the comments of your listing. You need to offer to the buyer to buy down their interest rate for the first year, or maybe for the first 2 years. And it's a way of offering to the buyer to get a more affordable payment out the gates to help them to afford the property and get in today, and then possibly, as mentioned earlier in the show, refinance, when things stabilize a bit and maybe come back down. So why are we talking buy downs? How is this beneficial? So as a seller, if you have been trying to get your home sold, instead of doing a price reduction on your property to try to get more people to run through, it is much better for a buyer. The interest savings to them over that 1 year or that 2 years that you buy their rate down for is quite significant. And for them, trying to get into the home, making sure that the monthly payment is affordable is really a lot more important than what the actual total sales price is. So if we're talking $10,000, $15,000, if you look at that number over a 30-year term, when we get it financed, it's not a huge difference in the monthly payment, yet 1% or 2% in interest rate is a huge deal. It changes the monthly payment significantly. So it would definitely be better for a buyer, more attractive for a buyer, and would make that buyer more excited about your property than your neighbor's property if they knew walking into that transaction that that is something that they could do to make the home more affordable. So buyers, what is a buy down? So let's talk about that a little bit. And sellers, you need to understand what it is as well. So we're not talking about points. We're not talking about paying points to buy an interest rate down for the term of the loan. A buy down is a short-term buy down. So think of it as an introductory or a start rate. So what are we doing? So if interest rates today are 6 3/4, for example, that means that for the first year, if we do a 1-year buy down, for the first year, your interest rate would be 5 3/4, and your monthly payment would be based on that lower rate. There are 2-year buy downs, or 2-1 buy downs, sometimes they call them. And that would say if we start at 6 3/4, that means that we're going to, if that's what the final rate is, then that means you're going to actually start at 4 3/4 for the first year, the second year at 5 3/4, and then the third year at 6 3/4. So why is this so, beneficial for a buyer? Well, as we look at the market, as times are changing, as we're trying to figure out what's happening, where people are, they're scared to use the word recession, but at the end of the day, our economy's in trouble at the moment. We're having a rough time. Inflation is through the roof. We haven't ever seen these numbers since the 80s. And the way that the Federal Reserve has decided, the federal government has decided the best way to try to get that under control is by increasing interest rates, short-term interest rates. And when they do those increases, we see mortgage interest rates go up. And as we get inflation under control, then we'll start to see those stabilize. And then more than likely start to get cut and come back down. So when we look at what the financial advisors and, the big wigs, in the financing industry, what their projections are, what they're expecting, what they're assuming, the phone calls that we're getting on, the Zoom meetings that we're getting on, giving us the details, what does everybody know? So throughout the industry, most loan officers, real estate agents, anybody financially, the majority are in agreement that we are realistically probably going to see. And you guys hear me say realistically probably because I don't have a crystal ball. Nobody has actually come out and told us what they're doing. Nobody has made any hard, fast plans of exactly what to expect. So this is the assumption. So what the general assumption is in the industry is that we will probably see interest rates be increased at least another 2 times, maybe 3. So if we just had an interest rate hike, which we did last week, they meet every 6 weeks. So that would put us into November for the next meeting. And then we would be looking at February for the meeting after that. Hopefully at the February meeting, when they do that increase, by the time that we get to April of 2023, we will not see another increase. And so then the general consensus is we're going to leave things there. We're going to stabilize. We're going to try to reap the rewards of increasing the rate to get the inflation down, hopefully for a shorter period of time than longer. But it is the general consensus of what we're all expecting right now as of today, end of September, that we will probably see by the end of 23, beginning of 24, that those inflation numbers start to come down and that then they would start to possibly decrease or lower or drop, whatever word you like to use, that Federal Reserve prime rate. And when they do that, then we'll start to see mortgage interest rates come down. So keep in mind, if we've still got 2 to go, we're definitely not through the woods yet. Interest rates are going to still continue to rise probably for about the next 6 months, if you kind of count, or, probably 6 months or so. And then we're going to kind of see some leveling off. And then hopefully we're going to start to see some things come down. So if that is the assumption and you're trying to make plans and arrangements based on that assumption, then having the seller buy the rate down for you for the first year or 2 would definitely put you in a position where it is a lower interest rate than what you would get today. It is a lower monthly payment than what you'd get today, which makes it more affordable for you. And it gives you the opportunity when it does go to adjust to its final rate where it will stay for the remaining term of the loan, gives you the opportunity to refinance prior to that shift happening. So I really like the buy downs. I think that they're a fantastic program. I think sellers, it is definitely something that you should consider offering to the buyers that are coming into your home. I do believe that this is going to make you more attractive than your neighbor if you're both on the market at the same time and you have, identical properties, you're in the same tract, you're in the same floor plan. You are definitely going to be more attractive to a seller that is not offering those. And trust me, those buyers are reading those comments as they're scrolling through Redfin and scrolling through realtor.com. They're reading all of the comments and they're looking to try to find something that is affordable, that they like. And so definitely it gives you an opportunity to stand out. And buyers, if you feel like you've been priced out of the market, the buy down is absolutely an opportunity for you to still get in where interest rates were, April, May versus today, September. So, of this year. And remember, this is unprecedented. What has gone on this year. At the beginning of this year, our interest rates were in the 3% range. And as of today, we're teeter-tottering on high 6s, low 7s. So, this was the fastest that we've ever seen interest rates move in this short period of time. So when I say where interest rates might have been in May or so, that is about right. If we were to do a 1-year buy down, if you do a 2-year buy down, you'd actually actually be where interest rates would have been nearing probably October-ish of 2021. So definitely opportunity to still buy a home at an affordable level, knowing and assuming that in the future that your plan is to refinance that loan when things do calm down. So I love buy downs. I think that they're awesome. I think they're amazing. We've had a lot of people asking about them here recently. Like I said, we did a show on them about 6 months ago, and I think that we were just a little bit ahead of the market catching on and realizing what a great opportunity that it was and the program and how it works. And so I just wanted to bring this to your attention again. But with that, we are going to take a super quick break. And when we get back, I have a humongous announcement of what Mortgage Mom Radio wants to do for you and what we are going to offer to do for you when you do your loan through us in terms of buy down. So stay tuned. Don't go anywhere. We'll be right back.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Here we go. Home buyer education. You guys are looking at the very first screen that is in my PowerPoint presented by Mortgage Mom Radio. You've got my name, you've got my licensing. That's all very important because it is important to know that the person that you are working with is a licensed agent or a licensed loan officer in your area where you're looking. That is very, very important. I do recommend that you have somebody with state licensing for your state. So for example, I personally have 13 state licenses. I'm working on 3 more, so I should have about 16 state licenses by the end of this year. And many loan officers will only have 1 license for the state in which they work and they live. So you do want to make sure that you are working with somebody who is licensed in your state. It is very important. Every state is a little bit different. The rules, everything that goes along with the financing can be slightly different from county to state to city. So that is very important. Now, the cool thing about Mortgage Mom Radio, since we are licensed, or I am licensed in so many states, we can actually work with you not no matter what, but for a good amount of the nation, a good amount of the country, we can work with you. So we have many clients who have called us and said, try to figure out where I want to go. I might want to be in Texas. I might want to be in Florida. We can help him in both of those journeys. Tennessee, Georgia. If you guys want to have a list of every state that we can help you in, please feel free to reach out. I'd be more than happy to give that to you.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and I'm bringing you guys education and information about all things real estate and mortgage. Today, we're talking buy downs, and we're going to get into lock and shops, and then we're going to talk a little bit about Mortgage Mom. So before the break, I said I had a huge announcement. Mortgage Mom Radio wants to get on board. It's very important to us that our clients still have the opportunity to buy a home right now, that they can afford the monthly payment that they're getting into, that it is still a comfortable payment for them. And so we are going to offer, this is huge, I hope that everybody is listening, we are going to offer to buy your rate down for the first year on us. You do have to call us. Obviously, you have to do the loan through us. That does not pertain to, oh, hey, I'm going to go shop for another mortgage lender and I'm going to call Mortgage Mom Radio and ask her to write me a check. That doesn't work. But if you do your application with us, you do work with us here at Mortgage Mom Radio, we are going to buy that rate down for you for the first year. So this is very important. It is important to us. I keep preaching week after week after week about how important that it is that you guys buy a home, that this time next year, you're going to be kicking yourself saying coulda, shoulda, woulda. You know, I keep trying to tell you guys, rents are going up. They are skyrocketing. They're going to continue to go up. I have people ask me every day, but aren't rents going to go down? If we, have the problems of the economy, if we go into recession, that's not really what happens, guys. Actually, rents continue to go up. And if you get into whatever your favorite search engine is and you type in rents and you look at the history of rents and what people have paid, recession or not, those don't come down. If we were to end up in a situation where people are losing their homes for one particular reason or another, they've lost jobs, businesses have gone under, which could happen, right? That's definitely a possibility. It doesn't matter how good that the economy is, those situations do happen. But if we're in a situation where it's happening to more people and that were to happen, those people need to go find housing. So what do? They go rent. What does that do to the rental market? It hikes it up, it increases it. So many times during periods of recession, for example, the great financial crisis, which is what they're calling 08 and 09, that was actually rents spiked during that time because of the amount of people that lost homes and needed to go rent, couldn't stay in the home that they were in. So just keep that in mind. You really do need to buy a home if you haven't bought a home already. So we are bringing this to you. Heidi jumped on and said, woohoo, that's awesome. Yes, it is, Heidi. I haven't even been able to talk to the team about this, so I'll do that after the show is over today. But I want you guys to hear that one more time. Get your application in with Mortgage Mom Radio. We're going to run this special through the month of October. I can't even believe we're in October. It's so crazy. But we're going to run it through the month of October. If you do your loan application with us and you lock in an interest rate in the month of October, we will buy your interest rate down for the first year, and that is on us as a lender. So that brings me to the next point about buy downs, which is really important for you guys to know. If you want to do a buy down, the seller, the lender, or the real estate agent would have to buy that rate down for you. As a buyer, you are not allowed to buy your own rate down. You cannot pay to do the buy down. And again, we're not talking about points. We're not talking about paying 1 point or 2 point to buy the interest rate down by 0.25%. We're talking about buy downs. So a buy down is an initial amount of money up front. And we'll talk about that in a second. How does that get calculated? But it's an initial amount of money up front that will give you an introductory rate for the first year. So it will bring that rate down 1% for the first year. You can get into buy downs that are 1 year, 2 year, 3 year buy downs. The longer that the buy down is, the more expensive that it is. So a 1 year buy down will be significantly less money than a 2 or a 3 year. But if you are a buyer, the seller, the lender, or your realtor would have to buy that down for you as part of the contract. So just keep that in mind. If you're thinking, wow, that sounds really great, you want to make sure that you're working with a lender that does them, understands them. So a sellers, perk your ears up right now. If you guys are out there listening to me, if your home is on the market and your real estate agent has talked to you about offering a buyer a buy down, and me, Mortgage Mom, is saying, hey, through the month of October, I am willing to buy your client's rate down for the first year. So seller, you need to tell your real estate agent, hey, I need the buyer to call my lender so that they can get their rate bought down. I just did it for you. I saved you money. Maybe you could offer that buyer a 2 year buy down, and that would be even more beneficial to your buyer, help your home get sold a lot quicker. So if you're out there, you have questions about it, you want to talk to us about it, and you're a seller, please call us as well. This is not just for the buyers, guys. This is for the sellers as well. We are out here. We are understanding the economy. We're understanding the inflation. We're understanding our pocketbooks, our gas, our groceries, our utilities. Everything in life has gotten more expensive. And so this is what we can do as Mortgage Mom Radio. I'm putting my I'm putting my money where my mouth is, and we're here to step in and we're here to help you guys. So give us a call, reach out. The number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. give us a call, get on the calendar, talk with one of the girls. If it's a Saturday or Sunday, they're answering. If they're on the phone, it'll go to call service. Call service can book an appointment for you, same exact day for a call back. If there is a time that you need that is not available, it's not there, as I've always said in all of my shows, reach out to me. Go to mortgagemomradio.com. You can click on the Contact Us button. You can send an email to questions@mortgagemomradio.com. mortgagemomradio.com is going to get you guys everything you need. Debbie@mortgagemomradio.com, questions@mortgagemomradio.com. Go to the website, click the Contact Us button. There's a big button on the website that says get your appointment. Click the appointment button, schedule yourself. But if you need an earlier morning, or you need a later afternoon, or you need a Saturday or a Sunday, just reach out and let me know, and I will make sure that we get you an appointment scheduled. We are here to help all of our listeners, and we really do want to give you guys the very best possible. So again, this was all about buy downs. If you have any additional questions, you need more information, you're a seller and you want to make sure you're sending your buyers to us, call us, talk to us so that we can make sure that we're helping you and coordinating. If you're a buyer and you've been thinking, I feel like I'm priced out of the market, reach out. Call us. Let's talk to you about the buy down, and let's make sure that you're writing a contract on the homes that you love in the right way to make sure that you get that buy down program. It really is fabulous. It's fantastic. And I do truly in my heart believe that come end of 23, beginning of 24, we will start to see those interest rates break. We will start to see them come back down again. And it would be a really great opportunity to be able to refinance, get into the longer straight 30-year term at probably a very similar interest rate to what your buy down rate would be rather than your final rate. So again, happy to go through this with you one-on-one. Call the office, go to the website, get yourself a consultation. We're doing it here. We're doing it for free. This is what we love, and we just want to see everybody obtain the goals that they're looking for. So next topic is lock and shop. And I think this is a really huge topic that we do need to discuss. This week has been an absolute roller coaster, and it is only Wednesday. So I do want to explain lock and shop. I want to kind of give you guys an understanding of what's been happening in the market, what has happened. Many of you don't follow it the way that I would. You don't really understand what is going on. You're pre-approved, you're out looking for homes, and little to your knowledge did you know that interest rates went up by 0.5% and came back down 0.25%, and they're flying all over the board right now. And if you had a lock and shop program, you wouldn't have anything to worry about. So stay tuned. Don't go anywhere. I'm going to get a sip of water and we'll be right back.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so how do you guys contact us? And this is really important because once we're done with this presentation today, you may decide that now's the time. You want to get things started. You want to ask us questions. Let me just tell you that anywhere at all that you look for Mortgage Mom Radio, you can find us. Everything is Mortgage Mom Radio. Don't forget the radio, because there are a ton of people that try to call themselves Mortgage Mom, but Mortgage Mom Radio, you will find us. The website is mortgagemomradio.com. On Instagram, we are Mortgage Mom Radio. You can see it all here. It's on this screen.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and I'm bringing you guys everything, all things real estate and mortgage, all the education and information that you could need. And we're making sure that we keep you guys active in the market and out there looking for homes. I do want to mention for anybody that is a homeowner, not trying to sell, not trying to buy, you guys are listening to the show and you're going, I'm really bored. You're not talking about me. We can help all of you with anything that you could possibly be thinking that you need to do. If we cannot help you, we're going to at least get you headed in the right direction. So whether you're trying to refinance, you're trying to do a reverse mortgage, you're trying to do an equity line or loan, we can help you with whatever it is that you need to obtain. Just call us. Let us talk to you. Let us figure out what you got going on. We do hard money. We do, non-QM, which is kind of an alternative, alternative document loan programs. We've got, a stated income loan program. Basically, it's not even stated income anymore. It's basically no ratio. We don't even list where you work. We've got investment property loans. We have just about everything that you could possibly need. So just as a quick snip in for my current homeowners, if there is something that you need to do, something that you've been thinking that you want to do, just pick up the phone and give us a call. So once again, it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So let's get into it. Let's talk Lock and Shop and why is this so cool? So we started talking about 6 months ago, and I know that my girls are all watching this show right now. So I want them to throw out, they're going to be guessing just as good as me. I'm in studio. They're not pulling up rate sheets from 6 months ago, but I want them to throw into the feed right now what they believe that the interest rates were 6 months ago. So if we go back to, we're almost at October. So if we go back to March, in March of 2022, what would be your best guess of where interest rates were at today? Okay. That's very important for you guys to think about. Where were interest rates at 6 months ago? So our Lock and Shop program gives you the opportunity to lock in an interest rate, and you can choose whether you want a 90-day rate lock, you want a 120-day rate lock, or you want a 150-day rate lock. The longer that the rate lock is, it is going to cost you more money to lock in that rate. There is an upfront fee charged for that rate lock, and it is non-refundable. So I want to make sure that everybody hears that loud and clear. Upfront fee, non-refundable. The longer the lock, the more expensive the upfront fee. Okay. Now the upfront fee is not anything. It's a drop in the bucket when you think about the difference in where an interest rate would have been, where your rate could have been had you been on this program. Had you locked yourself in for 150 days, you locked yourself in back in April. Let's say Fluffy jumps on. She's guessing 4.5%. I haven't seen Heidi jump in with her opinion yet. I haven't seen Heather jump in with her opinion yet. So we'll see Carrie jump in here in a second. I want them to all give me their opinion. Where do you think rates were between March and April? But I'm going to guess actually, Fluffy, you're pretty close at 4.5%. We were probably very, very close to that. Maybe 4 3/4 or so. If I had to actually take a guess of where we were about 5 months ago. If you were closing on a loan today with a 30-year fixed interest rate at 4.5%, that would actually cost you probably about 4 or 5 points. 4 or 5 points is a percentage of your loan amount. So if you get a loan for $400,000 and it costs you 5 points to buy the rate down. So we're not talking a buy down like we talked earlier in the show, but to buy the rate down, a permanent 30-year fixed, buying your interest rate down permanently. Not a 1 year or 2 year buy down, but a permanent 30-year points. You're paying points. 5% of $400,000 would cost you $20,000. 150-day rate lock costs you 1.25%. So that would cost you $4,300. I'm in studio. I don't have a calculator. Heidi can do it for us really quick. Heidi, what's 1.25% on 400,000? And Heidi says she'd say between 4.5 and 5, and I said 4 3/4, and we had our listener Fluffy jump in at 4.5. So you guys get where I'm going here, right? You would have had an interest rate that nobody wants to put $20,000 into an interest rate buy down. They just don't. But if you had done a Lock and Shop, you could have had an interest rate that we would have been offering to you back in April or May, and you could have been closing on a mortgage right now. The Lock and Shop program is phenomenal. It truly, truly is. However, the people who have called me that are interested in it didn't understand it correctly. So these are the things that I want you guys to talk about. So Heather said it would actually be $5,000. So thank you, Heather, for jumping in. So 1.25% of a $400,000 loan amount would be $5,000 versus the $20,000 that it would cost you today for the same rate. And that's if you can even get that rate at 5 points today. I mean, I'm going to be honest with you, it could be more than that. So it is a significant savings to do a lock and shop. But I want you guys to hear me out. This show is about giving you guys the education and information that you need to make the right decisions. I am here to provide you the education, and I am here in hopes that you will call my office, and with that information and that education, that you feel comfortable and confident working with Mortgage Mom Radio. We do ultimately need you to work with us for us to get paid to do anything at all. So keep that in mind. I'm bringing this information. I'm trying to make sure that I'm educating you to make the right decisions. It is very, very important that you have control over those financial decisions and you understand the decisions that you are making. So with a lock and shop, the important thing to remember, the biggest point, is that it is non-refundable. So I've had clients call that say, I want that lock and shop program. Can we go ahead and get that started? And I'll say, okay, I'd be more than happy to. Love it. But let's talk about you. What's going on in your situation? When are you going to buy? How much money are you thinking about putting down? Where do you think your credit score is at? We need to get you pre-approved. Oh, no. Well, I mean, I don't have a job right now, but I'm working on one, and, I'm working on my credit too. And, but I know I want to buy, so I want to get that rate locked in right now. If you don't buy, it is non-refundable. When I say that the maximum longest term that you can do on a lock and shop program is 150 days, it's 150 days. If you don't close that loan within that 150 days, you have lost your money and you have lost your rate lock. It's gone. So the last thing that I want to see you do is spend money for something that isn't going to benefit you. I don't want to take your money. I don't want to put you in a position where you want to, let everybody know on the internet about how horrible that the Mortgage Mom is. I want to make sure that I am signing the right people up for the lock and shop program. So number one, are you pre-approved? So are you ready today to write an offer today, get a contract accepted? You have your down payment, you have your credit, you are qualified, you are pre-approved, your income is there, everything is ready to go. You have the opportunity to buy a home today if the right property comes along. You, my friend, are the person that should be doing the lock and shop, not the person who's still working on credit, not the person who's still trying to gather together and try to get their down payment funds put together, not the person that's still trying to make sure that they're going to get a job. If you're thinking you're going to move across country and you want to relocate, but you don't have your job yet, you are not the candidate for the lock and shop. A candidate for lock and shop knows that they want to buy. They are out there. They are looking daily. Their thumb hurts from the amount of times that they're scrolling on their phone to look through the different listings. If they read one more MLS listing about walking through the front door and turn left and check this out, and it's, the builder's dream kitchen. Okay. If you just you're over it because you're going cross-eyed reading all this because this is all you do day in and day out is you're looking for a house. You are obligated. You are ready. You are motivated. You're ready to roll. You, my friend, need the lock and shop program. And if you do not find that you are that person that is in that situation right now today, you are not the person for the lock and shop. However, I have clients that have been that person. They have been looking for months. They did not want to pony up the money up front for that lock and shop program. And they finally get an offer accepted and they get under contract and they call me and we talk about the rates and we talk about the new monthly payment, not the payment that they were expecting because interest rates have gone up. And trust me, every penny spent on that lock and shop program would have been worth it. So let that just kind of resonate a little bit. If you guys have any questions whatsoever about the lock and shop program, I urge you to reach out, talk to me, talk to one of my girls, get us on the phone. If you haven't already, let's get you pre-approved. Let's make sure that you're ready to go. And then let's go ahead and work on that lock and shop and get you locked in. We already know they're going to do at least one, if not two, if not three more rate hikes. So get yourself locked in. Get yourself locked in. You trust me, you will appreciate it. Now, what happens if rates get better? You did the lock and shop, you paid the money, you locked in the interest rate. What happens if rates get better? Probably not going to happen, but what if? You do get the opportunity to float the rate down to the current market when you do a lock and shop. So if the interest rates do improve and you are within, I believe it is 2 weeks, if not 30 days, and I can double check that for you guys and give you the specifics, but before closing on the home, on the loan, if you are in escrow, you are under contract and interest rates have improved, we will absolutely allow you to float down to current market position. So please do not worry about that. You're not locking something in that you're not going to get the benefit of if things do improve. Heather does ask, she says, the lock and shop program is such an amazing program. Buyers should definitely take advantage of this option. Lock your rate now and shop for a home. Know your rate and payment. It's a great program. And that's actually, I couldn't have said it better, Heather. When you're out there and you're looking for a home and your rate isn't locked and you're asking, what is this house going to cost me? And you haven't talked to your real estate agent, you haven't talked to your lender about interest rates in, even a week right now, it might not be what you're expecting. Interest rates are changing and they're changing very rapidly, very, very fast. And so that was part of what I said when we came back from this last break was we're going to kind of talk about what's happened this week to give you guys an understanding of what is going on, right? So every day there's some news that comes out of some sort, right? Every time there's news, something happens. It trips up the markets. You guys see your stocks fall. You see your stocks come back. You see your stocks fall. You see your stocks come back. You see crypto tank. You see crypto come back. You see Ethereum tank. You see Ethereum come back. There's all kinds of things right now. The world is volatile. There's stuff going on in Ukraine. There's stuff happening with Russia. They're, claiming, threatening us with nukes, right? There's all kinds of news that comes out that trips up the market, and it can trip it up very, very quickly, very fast, and very rapidly. So, for example, last week, the Federal Reserve did come out and raise the rates by 3/4 of a point. We expected this. When I did my show on Monday last week, I said, we're going to hear the announcement Wednesday or Thursday. Chances are we're getting a 3/4 point rate increase. That was my guess. That's what I said that I was expecting. Some people were saying they thought we were going to get a point hike. Other people said, maybe a half. I said, nope, I'm going to agree with the 3/4 point. I think they're going to stick to their guns. They're going to do what they did before. And sure enough, that's what they did. So come Monday, it needed a minute to sink in, right? Come Monday, all of a sudden, the mortgage-backed securities were selling off. The stocks were dumping. Just everything went crazy on Monday. We lost 163 basis points in the market. Many of you are going, Debbie, what in the world is a basis point? What are you talking about? So the easiest way to explain it is 100 basis points would equal 1% in fee, or about 1/4% in interest rate. So if we lost 100 basis points, that means interest rates went up by 1/4. We lost 150 basis points, that means interest rates went up by 0.375. Well, we actually lost that day. It was like about 163 to 170 basis points. We were just about at 0.5% in rate that we lost on Monday. And mind you guys, I'm Wednesday. I'm talking today, Wednesday. Today is the 28th, I think. 28th. So today is Wednesday the 28th. I'm talking about 2 days ago on the 26th. we lost almost 0.5% in interest rate in one day. Now, yesterday, things stayed basically the same as Monday. Didn't lose anything, didn't gain anything, kind of flattened out. All of a sudden today, Wednesday, we just got 90 basis points back. And it's noon. It's 1:00 here in, Pacific time. So market's almost closed. It'll be closed in about an hour. But as of the time that I went into the studio, and I'm going to pull it up right now on my phone to see where we are at right now, this second, we are at 97 basis points that we are up since we opened this morning. So we are still down from Monday. If we are from where we opened on Monday. So let me back that up here in a second too, because you guys have to understand the way that this works. On Friday's close to Monday's open, we get a rate sheet. So where rates were at on Friday, Monday morning before things changed, rates were about the same. Then things went haywire. And we started to see changes. We started to get intraday rate sheet changes, worsening prices coming out. Every lender we work with sending new updated rate sheets. Some of them did more than one in that same day. So when I say we got back 97, almost 100 basis points today on Wednesday, we are actually still down from where we were on Friday and first thing Monday morning. So you've got to follow this cycle. And unfortunately, y'all have regular jobs. You go to work and you're doing something different. You don't live in, I'd like to buy a house land. You have to work for a living. And then when you get home at night, you're shopping through realtor.com and you're looking at, what's for sale. But if you had no idea that interest rates are 0.25% higher right now than they were on Monday morning or Friday last week when you talked with your loan officer to get pre-approved, you'd have no idea that the house that you're looking at is not the same payment that what you were expecting. It's now going to cost you more for that same house. So once again, Lock and Shop program. I can't say it enough. It's fantastic. These crazy roller coasters are going to continue. We're going to see them happen probably for the next 6 months. If you ask me, the mortgage mom, what's my opinion? Don't have crystal ball. I cannot guarantee that, but that's what I think we're going to see coming. And get yourself locked in. If you're out there, you're shopping for a home, you need one, you need the tax deduction, you're tired of the skyrocketing rents, you're tired of moving around, you're tired of worrying about the fact that you might have to move if, your landlord wants to sell, you want to try to get into a new school district, whatever your reason is for why you want to buy, if you are absolutely 100% serious, get pre-approved, get yourself prepared, get yourself Lock and Shop. Lock and Shop. Get it in there. And on top of your Lock and Shop, then also let's talk about the buy down. So tons of good things that we can do for you. We absolutely are here to help you guys. We're helped to try to make this affordable. And we want to make sure that we see everybody get into a new home. Once again, it's 844-935-3634. That's 844. We lend for you. WELEND and the number 4. Give us a call. We want to help. We're taking calls Monday through Sunday. We 24/7 have the call service that answers when we don't. Many of the girls will still answer the phone even at home at night if they're just not busy. Kids are doing homework and dinner's already done and phone rings, they answer. And if they don't answer, you can schedule an appointment with our call service. So no matter what, we're picking up the phone. We want to help you. Get your consult. Go to our website. Go to mortgagemomradio.com. Click on the contact us button. Click on the appointment button. Send me an email. Whatever it is that you need to do, get on the books. Talk to Mortgage Mom Radio. Let us help you. Now, earlier in the show, when I first got started, I said I wanted to talk about Mortgage Mom Radio. And unfortunately, I don't have a lot of time to do that. But the one thing that I do want to mention is that I have been doing this show for you guys since 2014 in one way or another. It's obviously morphed its way into what it is today. Now it's all trademarked and branded and Mortgage Mom, and I'm on multiple stations and got the podcast going and I've got the YouTube happening. But all of this started in 2014 for me. And it was all about bringing you guys education. And also, hoping that people felt comfortable with me. They liked the way that I talked. They could hear the sincerity in my voice. They could see it on my face. They knew that what I was trying to do was to benefit them and to help them and to put their family and their future in front of myself. There have been many times that I have had people call me that I've told them, call a credit union. That's where you belong. Call Union Bank. That is where you belong. If you don't belong with me, I'm going to point you in the right direction. I stand by that. I've always stood by that, and I will always have your best intentions at heart. However, things are slow right now. I'm sure you guys have heard. We're at an all-time 30-year low for mortgage applications at the moment. Does that mean that people aren't buying? No. What that means is that somebody that owns a home today and has an interest rate locked in at 3% from the beginning of this year and all the way back through 2020 has absolutely no need to do a refinance right now. They don't want to. They don't want to touch that mortgage. They don't want to sell unless they have to sell. They're getting relocated. They want to move to a new state. Somebody that has a reason to sell is going to sell and buy a home. But if you don't have a reason to sell, you don't have to take cash out. You aren't applying for a refinance. You aren't applying for a new mortgage. You're not applying for a new purchase. You're staying where you're at. You're sitting tight. You're thinking, maybe I might do an equity line, maybe pull out some cash and do some home improvements. Forget selling. I'm just going to stay put. Mortgage applications are at their lowest levels in 30 years. I need you to make me your first phone call. I need you to give me the opportunity to help. And if I can't help, I am going to set you in the right direction. I'm going to make sure that we get you off and running to the right person where you belong, where you need to be. But if we have the opportunity to help you, we want to help you. It does cost me money to keep radio and podcast and YouTube, everything running. And I want to be able to continue to do that. The home buyer workshops on the weekends, that's very important to me. I come in and I do that, and it's a Sunday and it's 3-4 hours and you guys are virtual. Sometimes you're in person. I am trying to give my all to you to make sure you come first, have the education, and understand the information. But in order for me to continue to do that, to spend the money that I need to spend to be able to get you guys what you need, pay for all of the artwork, pay for the, post, cleanup of the sound and the files and getting it to the station, I need you guys to make us your first call. So please, I'm asking you, if you think anything real estate, buying, selling, refinancing, equity line, equity loan, whatever it is that you have in mind, if you like us, you like the show, you've been listening for years, please make us your first phone call. It's 844-935-3634. We lend for you. WELEND and the number 4. And with that, I'm going to sign off from this week's show. I sure hope that we hear from a bunch of you guys. We're buying your rate down for the first year at no cost to you. Buyers, purchasers, sellers, send your buyers to us. We talked about buy downs. We talked about the lock and shop, and we'll have just as much great information for you guys again next week. I hope you guys have a fantastic rest of your weekend if you're listening by radio, and I'll be back next Monday or Wednesday. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.